फ्रेंड्स, दिस इज रजदर एंड वेलकम बैक टू द यूट्यूब चैनल एंड आज जो हम बात करेंगे वो है is this good time to invest into the market when the sensex is at the all time high of around 64,000 and the nifty at around 19,500. So for those of you who want to invest in the current market but don't know whether we should go full throttle or in parts or what are the best ways in which we can tread the way. So this video in short 2 minutes to 5 minutes will explain to you different strategies. Yes, six strategies in which you can still invest into the current market even if it is at the all time high. The objective of this video is to ensure that you have more odds in your favor so that you reduce the quantum of the risk involved in investing while you are taking care of your risk tolerance, your investment horizons, your financial goals, and all those aspects into consideration. So guys, here we begin. The first strategy will be the rupee cost averaging. No, rupee cost averaging as we mean like SIPs. So you can invest every month irrespective of the market. So you're not timing the market. So whether it is high or low or it's all time high right now, you can go for a rupee cost averaging. That is strategy number one. The strategy number two is the value investing. Now, even if the market is at the all time high, there are many stocks which are at a value buy. Companies which are having strong fundamentals, but have not been into a focus areas of the investor. So therefore, we can't see them going too high. So therefore, identify those value picks and invest there because your cost of buying will be reduced because they are at a value cost and not at a premium. Then diversify across asset classes. Now while you're investing, we know that commodities have softened a bit, so you have to invest now to reap returns in the future. So you should not be buying asset at a very high price now. So therefore, even if you want to buy now, you can buy into those assets which are not favorable at this time. So there, those could be the commodities. So you can take part in commodities which are available at a cheap prices, and you can diversify across different asset classes. Then there is a dividend investing. Now, while we know that the dividend yield is highest when the stock prices are low, but even if you want to invest at a high and still wants to make sure कि भाई अगर stock has come down or in the future the stock price comes down, but I should not be in a totally loss situation. So you can go for those stocks which have a good dividend paying history, taking into considerations the strong fundamentals of the company and the sectors into consideration. What does this mean? This means because when the dividend is declared, it is declared on the face value. Suppose many of the companies say we are paying 500% dividend on the face value. So the stock price today is 500, tomorrow it could be 800 or 600 or even 300, will not matter, because if the company is profitable, irrespective of the market sentiments, if they are paying 500% dividends on the face value every year, you will still be getting the dividends more or less with the same cash flow inwards in your bank account. So dividend investing is another strategy that you can consider. While if you're considering dividend yield, then obviously it is always prudent to invest when the stock market is less. But if you want to go at a higher level of the market, but still want some gains to be in your hand, then go for dividend stocks, which will give you that money. Now, then you can go for ETFs. Now, for all of you who do not want to cherry pick the stocks, but want to participate in the broader market, then you should go for index ETFs. Those index ETFs could be small cap, mid cap, large cap, diversified equity, or a thematic. But you can go into ETFs because that will give you a bigger and the better spread across the companies if you are not interested in cherry picking the stock. So this is one strategy. Then there is one which is called as the sector rotation. Now, when you see different sectors, they work in cycles. So if you see last 6 months, we have seen that with the rate of interest increasing, the banking and the financials had done pretty well. The consumer durables have done pretty well. So therefore, while they have done in the rising interest rate scenario, then in the falling interest rate scenario, will have to see whether banking is more lucrative, BFSI segment, or infrastructure will be more lucrative, because we can see housing demand and booking and everything going up, construction materials and all those going up. So therefore, which sector you want to take exposure could be one more strategy which you can adopt while deciding to invest. Additionally, you can go for those companies which are at the higher growth, irrespective of the fact the stock market is at the all time high or low. We can still see price to earning ratio of the broader equity markets in the 20s, in the range of 20s. So therefore we see that the market is not too much overheated, and still there would be companies which will be very good in their growth perspective. So you can or identify those growth companies and then invest into that. And then the last strategy that would be there is the contrarian in investing. Contrarian investing strategy is, if everybody is buying, you will sell. If everybody is selling, you will buy. That means when the market is at the lowest point, you are a buyer, and when the market is at the highest point, you are the seller. Now, while trader can do it, who has totally hands-on experience into the stock trading, but you as an investor, if you are not sure about this strategy, ki whether what is the right time I should buy or sell, then there are different mutual funds, yes, which are under the category of the contrarian investing, where the fund manager invests in the themes which are contrary to the current trend of the market. So if the market is at the all-time high and there are different companies in the sector which are going high, he will be investing into those companies which are not the favorites. So when the tides will turn, he's expecting those contrary strategies to fare well when the tide turns out. So these are the broader 9 strategies or 9 ways which you can optimize or which you can choose from to mark your timing to invest into the market if you don't want to leave out. Say if you have a FOMO, fear of missing out, but you still want to have the taste of the equity investing. So you can use any of these 9 strategies or anything else that might come up to your mind that could fit your investment profile, risk appetite, and your financial goals. Thank you so much for hearing me out. Have a great evening. Thank you so much.